U.S. stocks opened sharply lower amid escalating geopolitical conflicts in the Middle East. Volatility intensified during the session, and losses narrowed in late trading. All three major indexes closed lower, with risk aversion rising significantly. Capital flowed into defensive and safe haven assets, while growth sectors came under broad pressure. Next, at the close on March 3rd Eastern Time, the Dow Jones Industrial Average fell 403.51 points, or 0.83% to 48,501.27. The Nasdaq Composite dropped 232.17 points, or 1.02% to 2025.06.69. The S&P 500 lost 64.99 points, or 0.94% to 6816.63. All three major indexes dipped deeply during the session, with the Dow once falling more than 200 points.
Dow's down
Capital
1,200.
flowed
We have to
back
hold the
in
line.
late trading to narrow losses, presenting a volatile bottoming pattern. Sectors closed lower across the board, with materials, industrials, and technology leading the market decline. The Philadelphia Semiconductor Index plunged 4.58%, marking its largest single-day drop this year. Chip stocks including Micron Technology, Western Digital, and Intel fell sharply. Large-cap tech stocks were mixed, with Microsoft edging higher, while Tesla, Nvidia, Apple, and Google declined. Defense and energy sectors were relatively resilient, providing limited support. Defensive sectors outperformed growth sectors. Chinese concept stocks generally moved lower, with the Nasdaq Golden Dragon China Index falling 3.30%. Most new energy vehicle and internet names corrected. On the macro front, the escalating conflict in the Middle East sparked concerns over energy supplies and inflation rebound. Expectations of Federal Reserve rate cuts cooled further, and U.S. bond yields fluctuated sharply, pressuring equity valuations. U.S. economic data signaled sticky inflation, putting corporate profit expectations under pressure. Tech and cyclical sectors with strong earlier gains faced profit-taking. Capital rotated to low-valuation defensive areas for safety, and overall market risk appetite fell significantly. Commodity markets diverged sharply for equities, with safe haven and energy assets surging. International crude oil prices skyrocketed, with WTI and Brent crude jumping 8.28% and 8.55% respectively to hit stage highs. Spot gold surged and then retreated, breaking through $5,400 per ounce intraday to a record high before paring gains late on profit-taking. Silver fluctuated in tandem. The US dollar index strengthened, pressuring non-US currencies. Global capital flows clearly favored safe haven assets. Looking ahead, US stocks will remain driven by geopolitical conditions, inflation expectations, and the Federal Reserve's policy path in the near term. With volatility likely to stay elevated, the tech sector still faces correction pressure, while safe haven-related sectors such as energy and defense remain relatively resilient. Precious metals like gold continue to attract capital. We recommend strict position control, balanced allocation to defensive and safe haven assets, avoidance of high-valuation growth sectors, close monitoring of geopolitical developments and macro data, and waiting for market sentiment to stabilize.